Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, my guest this segment, Nick Santiago, President and CEO in themoneystocks.com. Nick, thanks for coming back on the show.
Great to be back, Michael. Thank you for having me.
All right, my pleasure. Listen, you've got one of our social network members that signed up and has got a question for you about a fantastic call that you made, the SLV call. You basically said you really called it right. What do we do now? Should we get back in? What are you thinking?
No, don't get back in now. I mean, if it does rebound to the upside, really, it's going to struggle to get above 33. Last week, I think I was pretty emphatic on your program, saying this is it. I didn't see much more upside. A lot of people were thinking it was a breakout there, but right now, you get interested in this. Silver and gold are going to be tradable. When this gets back down, $29.50, somewhere around that, $29, you could look to trade it again for a bounce. But that's all you're going to want to do with these at the moment. I don't think that silver and gold, for that matter, are really ready to break out to new highs right now.
Okay, what's the outlook as we go through the holiday season and getting into the early part of next year with this?
Well, right now, I mean, you just have to watch these charts because we have a lot going on. But when I look at this at the moment, and I look at the bigger time frames and I try to time where these things are setting up to break out, they're just not ready yet. It's just, not that they're bad or they look wrong. The patterns are the footprints of human nature and human emotion. And they're just telling me they're just not ready yet. But, things could change quickly, and we'll just watch them on a day-by-day basis. But right now, if you look at SLV or even the GLD for that matter, both are telling us that they're just going to be in a trading range for the foreseeable future. Okay, all right. So just wait until it gets down there around the 29 area. There's no cycles points on it right now. No cycle points on it right now. It remains in a trading range. I mean, you could take a look at the weekly chart of the SLV, Michael. You might even appreciate this, and you just go back to October of 2011. You could just see the range that it's in. I mean, it's really basic there, going from 26 to 35 and. It's kind of just chopping up and down, in somewhat of a sideways channel. That's still a good trade. Well, the way you put it out there, it's still a really good trade. Yeah. I mean, we bought the SLV up at at $30, and 34 was time to 33 was time to exit. So, I mean, that's there's great opportunities here on a trading basis. I just don't think it's meant for the buy and hold investor right now. And you nailed the stock market too, but that's not next. Next is the dollar. Right, the dollar. Well, last week when I was on your show, I think we talked a little bit about the dollar. I think the dollar was setting up for a bounce. It looks like today we're getting a pretty robust bounce in the dollar. I think the dollar can go a little bit higher from here. I don't see why this thing can't get back to, $81.50 to maybe possibly even $82. It's showing very good strength today, a nice little rebound. You're making higher lows. And, that's a tradable chart as well. So I think the dollar has some upside momentum here. Okay, all right. Do you see this lasting for a very long, any length of time? Sorry. Well, not really. I think we could trade these things into ranges, and then we need to move aside. Cyclically, I'm a little uncertain how this is all going to play out. I have to see really where the next pivots are made on the charts, and then we'll have to go back to work and look at how we can calculate this. But for tradable levels, I think right now the dollar is getting a bid. The euro should pull back, and we'll look at the euro again when it gets down to the 127, 126 level. And I think we could look at the U.S. dollar index, potentially getting up to, $81.75, $82 on the Z contract. Okay, all right. So any pullback between here, short term, you're looking at a buying opportunity, taking it back up to the 81.50, 82-ish. Is what you're saying, right? Yeah,
okay, got it.
Yeah, right now I think the dollar is making a little bit of a move, making a stand today, and
trade the range.
We'll see where this goes, but I'm looking, at the dollar moving higher from here.
Okay, I got it. Well said. Hey, I'm not going to argue. I mean, you keep knocking these things out of the park, and I hardly ever see you miss it by more than a day at that.
Well, I've been getting lucky, so I will, let's hope it continues.
Okay. All right. What about Apple? You need to have a shirt that says, yes, I called the top on Apple.
Oh, I'm making a living off of Apple these days. I mean, it's probably become the greatest day trading stock ever. Just today, we bought Apple down at the 520 range. Now, this stock is really just in a trading range. The positives for Apple, and I wanted to give your listeners the positives and negatives. The positives are that the stock reversed today without breaking the November 16th low, which was around the 505 level, 506 area. You got a little potential higher low, so Apple could chop around. But to me, Michael, it looks like a broken stock right now. So, I mean, if Apple got up to, the 625 level ever, I mean, it might even be the next great short. So, right now it's a tradable stock. It's going to be in a range. It's really a day trader's dream. Outside of that, it's a very, very hard stock for swing traders and long-term investors to play because the stock does look somewhat broken. But, I can't rule out, as long as it doesn't take out that November, the November 16th low, I can't rule out Apple moving back up towards the 605, possibly, 625 level. I mean, that would be about it, though. At those levels, it would be a stone cold short in my book.
Got it. All right. Brief question, and aside from, we're getting into the physical cliff in just a second, but do you see money coming out of Apple and going into Google? I mean, this Android stuff is really knocking the bottom out of that iBook.
Yeah, well, I think that
iPad, excuse me.
Google right now is looking much better than Apple. It's putting in a nice little base over the last 4 trading days. Now, Google could go back up to the 7.25 level, 720. I don't see it really getting much past that, though. After that, it will need to form a new pattern, or it need to consolidate and build some cause to move higher. Right now, I could see a move on Google up to 720. I wouldn't rule that out at all. I think that is possible.
Do you see a inverted head and shoulders building there on a daily basis? I'm looking at this just now, and it's like, we might be building the right shoulder of an inverted head and shoulders with Google.
Yeah, that pattern right there, the right shoulder is a little bit too high for my liking, around the 50-day moving average.
Yeah.
So I don't like it there. That's why I think it wouldn't give us enough of a symmetrical pattern to calculate the upside target. I'm leaning towards more of a mathematical method, which tells me around the 720, 725 level would probably be Google's upside at the moment.
Okay. All right. Fiscal cliff.
All right, this fiscal cliff, it's almost comical with these politicians. One day they say one thing, another day they say the other thing. What it's really causing is just a lot of volatility in the market. And what I just want to point out is when you get these politicians coming on television every 20 minutes, it creates for good day trading opportunities. And I think that's where traders, need to start to focus on the short-term end of things, the short trades, the short-term trades that last maybe a couple of minutes to a couple of hours, as opposed to going into the swing trades, which are much, much more difficult when you have all this, political speak coming on TV each and every day. I mean, sometimes they'll pound Bloomberg and CNBC for hours at a time. You'll hear this stuff, and the market will move off of it. I mean, you'll get these small short-term whips, but if you follow the technicals and you look at the charts and you can read them correctly, there's a lot of good money-making opportunities out here.
I agree with you. I don't want to let you go just yet. J.P. Morgan tested the 50-period moving average yesterday, and now it's over it. So what is that telling you about the stock market?
Okay, J.P. Morgan, which, I follow this stock like a hawk, and I've been saying, even when it went down to that 200, still technically in good shape. The stock has upside to around 42.50, not a penny more. Okay,
well said. Events coming up for you?
Yes, this coming Saturday, we are hosting an In the Money Stocks methodology webinar. That will be Saturday, December 8th at 10 a.m. It will last probably about 6 to 7 hours. It's a boot camp of a day, but I am conducting that seminar. So if anybody does want to try it out or read about the details, come over to our website at inthemoneystocks.com.
Got it. And a big shout out to Jerry T, who had the gumption. Thank you very much, Jerry T, for that question about SLV. I really appreciate that. One more time, web address to sign up for the seminar.
Sure, it's inthemoneystocks.com. You could just click the education tab. You'll see all of our webinar dates right up there. This Saturday is the event at 10 a.m.
Okay, great. Nick, thanks for coming on the show.
Thank you for having me, Michael. Have a great day.
You too. Everybody, Nick Santiago, President and CEO, inthemoneystocks.com.